Welcome back to another video for HarborFinancialOnline.com. Today I'm going to be talking about the mortgage insurance tax deduction and to see if you might qualify for this deduction and how to report it on your tax return each year. So let me get the video going here. You can deduct qualified mortgage insurance premiums you paid under a mortgage insurance contract that was issued after December 31st, 2006. So any amount before this year, you cannot report it and get the deduction. So if you're looking to amend an old tax return, you can't report this mortgage insurance on the return if it was before December 31st of 06. Normally, you'll only pay for mortgage insurance when purchasing your first or second home. This is typically the case just because as a new home buyer, you're more at risk, so you have to have this insurance. So if you've owned a home for 10 years, you will no longer have the insurance. Normally, it's just going to be during that first year of your first house or the second house that you own. If you haven't been a homeowner for that long, they may require you to do that. It's based on your lender if you'll need to do that. You'll receive a 1098 at the end of the tax year that'll report this total amount of the mortgage insurance you paid throughout the year. The amount on that 1098 is what you report on your tax return. Now, on your tax return, you'll have a form called Schedule A, which some of you have probably heard of. This gets attached to your tax return. This is where you report that amount, and I'm going to show this to you guys. This is important as well. You might want to follow this. If you paid mortgage insurance after the close of that tax year, after December 31st, you must allocate that amount over the stated term of the mortgage or over 84 months, whatever is going to be shorter. Now I'm going to take you to our site, and I want to take you to the actual 2106 form real quick. This is the 210, this is Schedule A. I apologize. This is Schedule A. And on line 13 is where you're going to report that qualified mortgage insurance premium. Again, this is going to come on Form 1098. You're going to get that mailed to you from your lender. Your lender will get that amount because they're the ones that provide this insurance, the extra fee for that. All of this here is going to be related to your mortgage. So you have on line 10 is your home mortgage interest and points. You're going to have points again if you're a new homeowner as well. Now if you don't get this mortgage insurance reported to you on a Form 1098, you can still report it on 13 here. This is line 11. If you have mortgage interest and you don't get it on a 1098, you're going to report that on line 11 here. So again, this form here, Schedule A, this is when you're itemized. You have the option to standardize your deductions or to itemize. If you're a first-time homeowner, you want to itemize to get this deduction, because if you do a standard deduction, you won't be able to deduct this mortgage insurance premiums. Okay. And I'm going to take you to our website real quick here. We have a whole page on our site, HarborFinancialOnline.com, that's dedicated to mortgage interest tax deductions and related deductions to your mortgage. So I'd recommend checking out this page of our site at HarborFinancialOnline.com. This is something important that you should probably know. For your mortgage interest to be deductible, it has to meet certain rules. The debt must be secured by that residence. The interest can be on no more than 2 residences, and you have to be personally obligated for repayment of that debt. So you can't be living, say for example, in a relative's home. You live there full time, you've lived there for a long time. You may be paying that mortgage note to your relative, but the mortgage note is in their name. You cannot report it Same thing if you have mortgage insurance, you can't report it because you're not legally obligated. That person that owns the home has the legal obligation. So you're not required to report that, so you cannot get the deduction. So this is a good page for you guys to check out at harborfinancialonline.com. We also have a free online tax estimator, which will allow you to put in this insurance to tax deduction amount and see how it affects your refund and how it increases it, because it will make a big difference on your refund amount if you can report that. And one thing I wanted to mention too is look at amending possibly an old tax return. Again, you can go back to 2006. So say in 2007 you didn't report the mortgage insurance deduction, you can go back and refile that tax return, get that deduction, and increase your refund. So definitely something good you want to look at. And again, Schedule A is the form where this will get reported. If you prepare the return online, it's automatically going to bring in this form and fill it out for you, so you don't have to worry about that. Okay, we'll go back to the video. There are limits on how much mortgage insurance you can deduct. You're excluded if your adjusted gross income is more than $109,000 married filing jointly, and $54,000 of filing married separate. You cannot get this deduction. The deduction is lowered if your adjusted gross income is more than $100,000 filing jointly, married jointly, and $50,000 married filing separate. So those are the income amount, the exclusion amounts. And when you do the return online, it's automatically going to know those exclusion amounts. I appreciate you watching the video. We have lots more videos on tax out there through YouTube, and check out our site, harborfinancialonline.com. Thank you.